Welcome to the Payments Geek Roundtable, where we are proud to be payments geeks, and we're glad that you joined us here today. Sorry that we're having a couple technical difficulties, but that will dissuade us not one bit when we talk about the payments volume war. So this is a big question. Is it card networks? Is it alternative payment methods or APMs? Is it banks? Is it fintechs? Who is going to win? I'm Bruce Parker. I'm the founder and CEO of Modo, the payments orchestration platform that serves very large global enterprises. And we have one rule for this webinar. We'll see how we do, Eric and I. The first rule of the webinar is we are not going to be talking about Corona. So now that we've got that kind of out of the way, I am thrilled to introduce you to the best of the best. We have Eric Grover from Intrepid Ventures. And Eric, I would love it if you would introduce yourself to everybody.
Sure. So I'm a payments consultant. I've spent now more than 3 decades in payments, in card issuing, card networks, and processing. I was with what is now Synchrony once upon a time. I was with Visa International, with Bank of America, with Nations Bank's finance company, with Transamerica. For the last 2 decades, I've been providing corporate development and strategy consulting to payments players across the landscape, across the value chain. I was the first to publicly call for banks to spin off MasterCard and Visa, and have been a prolific commentator, speaker on the commercialization of the global retail payment network space and on regulatory issues. So that's where I'm coming from. I take a holistic view of the ecosystem.
Well, we're lucky to have you. Eric and I have been friends now for perhaps a couple decades. We may not want to confirm that. And I can tell you that he is known as one of the leading economist thinking people in the industry. I can't talk for the moment, I'm not sure. And he's usually flying all over the place, all over the world. And right now he's not. So what we want to kind of start with is there's obviously been a tremendous amount of change so far this year. In fact, over the last 90 days, I saw a chart recently, I'm trying to remember exactly where I saw it, where we've seen more growth in e-commerce volumes as a percentage of overall retail in the last 90 days versus that same amount of growth. It took 5 years previous to that. I mean, it's just massive up ramp. And if we take travel out, e-commerce numbers are just absolutely explosive. However, we are not talking about Corona. So we do want to talk about how things are going to change over these 3 different time periods, the short term, the medium term, and the long term. And I found this quote from Mr. Gates really compelling. It's not new. You've probably heard it before. But I think it's super relevant to kind of how we're thinking about things right now, which is that folks tend to overestimate what's possible in the short term to change, but they underestimate that in the long term. So the long-term view sometimes can move a lot more than we might expect. I think those were those disruptions kind of sneak up on us. So again, when we're thinking about these 3 periods and what kind of is the art of the possible, even if we just think back to the end of last year and how we were thinking about 2020, I don't know that anybody would have guessed this. But Eric, what do you think about the situation that we find ourselves in today versus where we thought we might be as we closed out 2019?
Well, where we are now, we're in an economic deep recession, if not depression. We're seeing the payment system roiled, but I would suggest the fundamentals with regards to card payment networks, with regards to banks, and alternative payment systems and fintechs, the fundamentals still apply. And so, network effects in payment systems are huge, are usually dispositive. The ability to influence payment share from the position as an issuer, from the position maybe as a wallet provider, as a bank, gives the position to capture outsized economics. Engagement around the customer and the customer transaction generally gives additional economics. Some of the tactics around that are changing in the short term, but I think if we look near term and longer term, they all apply. And we look at the trajectories of the existing payment systems players, and some of them are on great trajectories. And I guess I would argue that, more e-commerce, great. But if I'm a network, the e-commerce is running over a network. And if I'm a dominant network, it's probably running over my network. And the biggest e-commerce networks our big global catastrophe are still the biggest. And they're going to be bigger near term and long term. And for alternative payment systems, we kind of make this distinction that they're different. But the card systems, okay, they're traditional. We put cards in quotes, cards of form factor. The alternative payment systems are networks, and there are some places where they have network dominance, and often the so-called card networks are kind of boxed out. And weak card networks. So if we look at the U.S. landscape, there are networks like Accel, Shazam, Co-op, ATH, which no one outside the industry has really ever heard of. They were weak before, they're weak now, they're going to be weaker in the near term, and they're going to be lucky to be around in the long term. Yeah. So I guess that's my quick reaction.
Yeah. Well, it's funny, Mr. Gates, being our kind of leadoff quote, he's been talking to a lot of people for a long time about the risk of a pandemic, and I know there are people who have different perspectives on some of the things he's focused on or recommending, but we certainly have to give him some credit for not necessarily seeing the situation we find ourselves in, but at least the possibility that a tremendous amount could be disrupted very, very quickly by exactly this particular factor. I just think it was tough for people to imagine, and that may be part of the challenge. Maybe that's what we should be focused on today. However, I guess I'm not doing a great job following the rules. I don't know how, actually, if you think about that, how did the slides know I was, anyways, let's just keep going. You started down the comment of card networks. So let's go through these one at a time. Card networks, banks, APMs, and Fintechs. Let's talk about a couple of the dynamics going on in each of those. And you've touched on a few things in card networks, but I'm gonna do a little provocation and just see kind of what you think about a couple of different topics. So starting it off, I think this is one of your favorites because I know I've heard you say all sorts of incredibly insightful things about it before. Interchange. I heard a rumor, and I believe it was relatively well placed, meaning that there was published documentation to exactly this effect, that Interchange was supposed to be realigned earlier this spring. So tell us a little bit about, well, what's going on? What is that? If somebody happens not to be familiar, maybe a thumbnail sketch. And then, in the context of everything that's changed over the last few months, is that still on the table? Is that still in the cards?
Yeah, so I would make a couple comments there. So first, it's helpful to think about what Interchange is. So Interchange is a pricing system which balances participation on both sides of a two-sided payment network. And the networks, which in most markets, but not all, control it, they don't care who they're paying to. They want to pay interchange, see that the interchange flows to whoever is going to maximize transactions and revenue for them. Right. And if Walmart and Amazon could give them transactions, they'd be happy to pay interchange to Walmart. If consumer payment choice didn't matter. If say retailer payment choice was dispositive, it is very likely that interchange would be negative. So set aside, all of the rhetoric you hear about, cost-based recovery. So, yes, it's revenue source. People think about it as offsetting costs. But the interchange change that Bruce alluded to is raising some interchange rates in e-commerce, lowering some from some sectors like education, where getting acceptance is a more important it's more important to lower interchange to get more transactions. In e-commerce, merchants generally are price takers. And so
right.
You raise interchange to give more economics to big issuers so they can give more benefits to customers, cardholders, in quotes. And so, yeah, the networks have said they're going to defer the interchange changes. That's good PR. It's good optics. I get it. And maybe they'll defer them further. I mean, why wouldn't they? I mean, we're going to be in this crisis for a while, I think. And they will do. They're quite happy to, and it makes sense to not stir up the merchant lobby more than they have to. You may have seen the restaurant association tried to get. They sent a letter to President Trump, to Speaker Pelosi, and Majority Leader McConnell, asking around the first coronavirus relief bill that there be credit card interchange relief. And mindful, think back to Dodd-Frank, the financial crisis,
right?
Durbin, all of the attempts to regulate interchange in the U.S., freestanding political attempts, failed. Durbin, whatever he is, he's an astute politician. He recognized the opportunity. He knew something was going to pass. He made a political judgment that small banks are politically sympathetic, so you exempt them. Big banks are not politically sympathetic, so obviously you hit them. Credit cards, given the loss rates, that wasn't palatable. And he rammed through the so-called Durbin Amendment with no hearings, little discussion. I think there was some hope by some in the merchant lobby that something similar would happen this time. So I think the changes will be deferred, but and maybe they'll be recalibrated down the road. But as long as they're freely set, the networks are going to be tweaking them up and down by category. Interchange is lower for public utilities because the company selling you gas and electricity doesn't care that you want to earn frequent flyer points.
Yeah.
They don't think they're going to sell you more juice, and,
That's right.
and they know you're going to pay.
Right.
But a consumer electronics store or a hotel or a coffee shop is the dynamics are very different.
All right. Well, I think that's interesting. Never waste a good crisis, I think, is what I'll net that out. Depending on which side of the interchange thing you're on, that's maybe either an opportunity or a threat. Let's talk a little bit about the liability shift. So maybe again, if you don't mind, quick thumbnail sketch on what is the EMV liability shift, otherwise known as the chip cards. That's EMV. It's just payments acronyms stuff, which of course makes them extra awesome. But the liability shift and the timing as well for those folks that are familiar with it. What's going on there?
Well, liability shift. So for the vast swath of retail to physical point of sale, ex gas stations, the liability, if a merchant is complying with EMV and if the card is EMV capable, and if it is therefore an EMV transaction, then the merchant doesn't have fraud liability. And so that's all well and good, and the issuer keeps fraud liability. However, in gas stations, a significant percent of gas stations have not enabled or switched on EMV. It's a bigger deal. And so for many gas stations, they remain liable for fraud because they are non-EMV, or they will be liable for fraud if
when the shift happens. That's the shift.
When it happens. And it has been deferred. Again, this is recognizing that it is a big deal, recognizing now we're in a crisis. I guess I don't know when they will put a stake in the ground and say, this is it, they being the networks. At some point it'll happen, but generally the judgment is there's kind of a feeling of, have we got a significant participation? Are we just getting stragglers? Are we going to get, a huge hue and outcry? It's been a slow process. The EMV implementation, frankly, in all national markets, has been a slow process. It's going to happen. It doesn't affect online, other than insofar as fraudsters then often flee to online, looking because it's
right. It's easier.
Easier pickings. The bad guys are out there; they're not going away, and they're resourceful.
That's probably true. Yes, they're very, very smart. They're shockingly smart. Hey, so we talked about EMV. EMV, of course, comes from where history comes from in Europe. The Payments Association of Europe, around that whole smart card concept, is doing something with PSD2, right? I think you mentioned this the other day. So what is that a threat? Is that a thing? So maybe again a little bit of a thumbnail so people know what we're talking about. We can unpack some of the acronyms, but then launch in if you don't mind.
Yeah, sure. So it's actually, so there is an association of European smart card manufacturers, and it has put it last in April. It put out a white paper proposing a payment systems directive 2 or PSD2 anchored new payment system, which would be more European in quotes to appeal to the ECB and EC,
Sure.
i.e., not American like Dastardly, Mastercard, and Visa.
Right.
Um,
Right. Right. Right.
and but taking advantage of the enabling framework that the regulators, the lawmakers put in place with PSD2, basically, which mandates that every bank provide free payments access to the payment account. There are different standards in different markets, but nonetheless, they have to provide free payments access to permissioned licensed payments. And what this payments association has proposed is that, and the challenge of PSD2 as to get payment share, take share from the card networks, which is certainly what the regulators hope, is there's no acceptance network, there's no network, there's no value proposition for consumers or merchants other than it would cost less, presumably. And for issuing banks, it's a money loser. Cost them to process and they get nothing.
Right.
So what the association's proposed is leverage existing cards infrastructure to manage PSD2 payments and use the existing cards and point of sale systems, co-brand the cards, and they use an EU flag, but co-brand whatever you want, the PSD2 EU flag, with let's say a Visa Carte Bancaire card in France.
Okay.
And if the merchant were enabled to process PSD2 payments, and if the consumer wanted to do that, then they could initiate a PSD2 payment against their bank. But if the merchant wasn't enabled, the consumer wasn't interested, they wouldn't have to. So there's no burden on the consumer, so that's good. No extra burden really on the merchant, leveraging existing infrastructure. Now, it's problematic because the banks have and they might be takers here, but it's a money loser for them, whereas even though interchange is very thin, they're still making 20 basis points on debit and 30 on credit. It's also, this is cleverly designed to appeal to the regulators, the EU regulators' desire to have a European, again in quotes, payment system. So it's clever as far as it goes. It's still, there's not a path that they've demonstrated, but they put it out there, and we'll see. It's it strikes me as interesting. It's clever, and it's certainly intended to be a challenge to the traditional payments ecosystem.
Yeah. Okay. So I'm going to net this out a little bit. Over the short term, doesn't sound like there's much that's going to change. Interchange was supposed to be realigned, and that looks like that's deferred into either later this year or next year. And there was an attack politically on that in the United States, which seems also to have, at least for the moment, been rebuffed. EMV liability shift, same song, second verse.
Yep.
That's getting kicked out of the short term and maybe into the medium term, just again based on some part crisis, some part just the sheer volume or heft of all the different changes. And then last but not least is this sort of clever approach by the banks and or really the regulators leveraging the banks and the existing infrastructure. And that probably also is medium or long-term at best. So all of these changes sound like they're just in process as opposed to immediately at hand. I'm going to move on here. Let's talk about our friends, the banks. Let's talk about some of, again, the dynamics that are going on now and what that might mean over the short, medium, and long term. Let's start this off with real-time payments. Real-time payments in the United States is not exactly a new thing, but it's certainly a current topic. Why don't you just give folks a little state of play between FedNow and the clearinghouse, and what real-time payments mean, again, in that sort of same lens, shorter, medium, and longer term.
Absolutely, and Bruce, I guess I would broaden it a little bit from the clearinghouse and the Fed, real-time payments, and I would throw in Fiserv, FIS,
Right.
MasterCard, and Visa,
Yep.
and Zelle, because the purist would say real-time payments, we have the real-time interbank payments from account to account, and we have settlement, which is the clearinghouse model, and
Right.
is going to be Fed now model. But in terms of, from the standpoint of consumers and businesses using it, if I have a real-time payment and funds availability, I really don't care about the purist model. I have what I need. So
Right.
the clearinghouse, real-time payments, every country in the world has or has had one or more, ACH systems, batch systems, transferring funds reliably from one current account to another. And in recent years, there have been a steady stream of countries implementing real-time payment systems. And so the clearinghouse, which is a bank-owned association, was the first to go live with a traditional system in the U.S. The Fed spent many years with a use group socializing,
Yes.
entering real-time payments, which it wanted to do anyway.
Right.
Then
Because it's fun.
he gave Congress a courtesy briefing, and they've launched. And they first said they would take 5 years, and then Jerome Powell said it would be maybe sooner. They're going to get there. But in the market today, the clearinghouse is serving banks reaching over 50% of transactions already, and use cases are being built up. It has interestingly, it launched with equal pricing for banks regardless of volume at 4.5 cents a transaction, which was intended to dissuade the Fed from entering. Didn't have that effect. But if we look at the network products, so Visa Direct, Mastercard Send, Discover has a product, FIS has a product, and Fiserv has a product. The businesses are using these to deliver real-time use cases. So when Square pays its merchant real time, it's using card rails, and it's reaping 150 basis points, giving somebody giving the payment today as opposed to tomorrow. So we have a competitive real-time payments market in the U.S.
Mm-hmm.
We have use cases that I think 5 years ago nobody envisioned, and that's all for the good. It's going to be, by the time the Fed jumps in, the market is already going to be. I would argue it's reasonably well served today. It will be intensely served. Real-time payments, in terms of the use case that some regulators and some merchants envisioned of cheap retail payments, that hasn't happened. Because for retail payments, the part where it's important for real time, the payment guarantee, has been real time since the 1970s. The settlement piece is not so important, except for the Lyft driver who wants to get paid real time and is willing to pay 150 basis points for it.
Right.
So it's good. It's happening piecemeal globally. I think, interestingly, we are going to start to see some of these real-time national systems tied together, addressing cross-border use cases. It'll be slow. And again, this is a case where the network effects, how many points I can send and receive real-time payments to matter. So MoneyGram and Western Union are using real-time card payment system rails to do real-time payments. So it's a great use case. It's kind of invisible. Now, could they do something else? Sure, but at a global level, there aren't a lot of obvious alternatives.
Is there anything with respect to sort of the foundations of banking that are going to impact either volumes generally or real-time adoption? Is that everybody wants to always talk about, when we bring up banks and the overall landscape, about consolidation? How do you think that figures into the mix, and on what time scale?
Well, I think, and I'll focus on the U.S. since the U.S. is, compared to every other country in the world, is overbanked. I mean, has more banks. And it has more banks because historically there were limitations on branch banking, limitations on cross-border banking, cross-state border banking. And even as recent as 1984, there were 15,000 almost commercial banks in the United States.
Wow.
So a huge number. And if we look just pre-financial crisis, there were roughly 7,500 commercial banks in the U.S., so a lot less. If we look today or at the end of last year, there were only 4,400.
Wow.
And I will say with high confidence, in 10 years, in 5 years, 10 years, there are going to be a lot fewer. And that's the good and bad there, because small banks bring, or some of them bring innovation, they experiment, they can fail without people worrying they're too big to fail. That's a good thing. But the smaller the number of banks, the easier it is to manage this stuff. We're going to still have a lot of banks for a long time, which means that interconnectivity. So Fiserv sending payments to FIS, the Fed sending payments, sharing payments back and forth, interoperating with TCH, which so far TCH has said it doesn't want to do. That starts to become an issue. But in terms of the payment flow, today a bank is in the payments flow, other than people that are the cash payments outside the banking system, which is pretty small in the U.S. for all payments, and they're still going to be in the flow for all payments in the near term and long term. It is now, the more value they can wrap around, and they can be perceived by their customers as they're delivering it, the better. But I would suggest that it is likely that most of the banks are at risk slowly in the near term and long term of having eroding payment transaction economics and having eroding relationship or engagement capital, that other parties standing in between. And it could be managing the payments dashboard, the financial dashboard through a wallet, one of the tech players' wallets. It could be one of these fintechs, neobanks.
Right.
But is the bank going to be primary? It's still there, but if it's only a back-end payments utility, that's not good for the bank shareholder, the bank economics. If it's perceived as primary and it's the primary portal for engagement, and it has multiple financial hooks into the consumer, and it's the primary user and capitalizing on the data, then that's good for the bank. It is so there'll be fewer of them. The payments are all going to be there. $1 million question is, will there transaction economics on payments and their view of the customer be bigger, richer, or not so much? And if I had to bet, I think for most of them, it'll be not so much.
So short term, it sounds like we're expanding real-time coverage primarily with the clearinghouse. Medium term, we may or may not see FedNow finally show up after some kibitzing. And then longer term, you have a many to one bet odds that you're willing to take that there are going to be many fewer banks. Consolidation will continue, maybe at pace, maybe slightly accelerated for the moment, but in general, over a longer horizon, almost assuredly there will be fewer banks, and possibly they will have less of a role in the overall payments value chain. Fair summary?
Yes, and I guess I just add one thought.
Sure.
That longer term, real-time payments between accounts and for consumers, payroll, all the stuff will start to become just assumed. It'll be table stakes. It's not going to be a differentiator. Right now, we have players where there's, did my payment get there? Did my bill payment get there? But I think in the time frame we're talking of longer term, businesses and consumers will come to just expect it as a matter of course.
Right. It just works.
Yep.
Yep. Heard that one before, I think. Okay. Next up is everybody's favorite, the fintechs. So these new entrants, maybe not neobanks or challenger banks, but folks who are participating in the financial ecosystem in kind of a new way. They're not card networks. They're not the banks. Well, maybe first of all, who are they? And what do you see happening with them over the short, medium, and long term from a payments volume perspective?
Well, first, I guess I love the fact that there have been, over the last, let's say, decade, a wave of fintechs, putative disruptors, companies trying to enhance the payment system. That's all good. And some of them have failed, more of them will fail. Some of them have already experienced, enormous success. And those that have succeeded, even some that have failed, have caused some of the incumbents to be better. But if we look at those that have had the greatest success, most of them have tweaked or enhanced pretty well understood business models. And they've just been more nimble. They've made it better in some respects. So I think if you look at Stripe, fintech, payments fintech, it's a payment processor. It's a merchant acquirer. They're very good at what they do. They have a very strong governing philosophy, and it works. If you look at Square, I mean, people would talk about it as a tech, disruptor, upending the ecosystem. Baloney. I mean, it's the fundamental business model is providing, acquiring payment acceptance to small merchants. They were very innovative in underwriting and providing mobile acceptance, in building a brand, big deal. We're seeing this with a number of these players participating on both sides of the ecosystem. I think another area which doesn't get talked about much, the fintechs on the payment processing or merchant acquiring side, the Stripes, the Squares, the Audience are visible. We can see what they're doing. On the issuing side, issuer processing in particular, this has historically been viewed as an oligopoly. Big scale players, the First Datas, the TSYSes, the Worldlines of the world, big entry barriers, no bank would, and bank-centric in terms of customers, nobody would ever use a startup, somebody with a putatively better mousetrap. And we've actually seen recently a handful of pesky new entrants challenging them. So Marqeta, Tribe, Adyen and Stripe are both in the space. CoreCard, which is doing Apple with Goldman. They've been around for a long time, but now they're getting traction. Players coming up market from some of the emerging markets like RS2 and HBS, and I think that's great. And none of these players, by the way, in my view, are going to tomorrow morning, take the Bank of America portfolio away from TSYS.
Right.
But they are winning non-traditional business, and they are doing things quicker and more flexibly than what you would expect the boys at First Data or TSYS to do. And I think that's very heartening. I think some of these specialty players, they will continue to enrich their offer. And it's hard to pick one of them that would be a winner or winners, but the fact there are a bunch of them out there, and in fact they're pushing the Goliaths, I think it's very healthy for the ecosystem. And within that bunch there will be some winners.
Well, so do you think that the Empire Strikes Back? Do you think when they're messing around with the Goliaths that all of a sudden they come out and smoosh them?
Yeah, in a rational world, the answer would be yes, of course. That they were sitting there, but right now they're not taking meaningful revenue from these guys, right? It's right now their big customers are not going to go to Marqeta or Tribe or RS2, so they're focusing on serving their big behemoth customers, and they're serving up APIs and they're saying we're flexible and they're responding a bit. But if you were trying, you had an idea in payments and it required somebody being flexible and working with you, chances are you're going to align yourselves with one of these challengers, because the Empire, can't really counterfeit being a nimble fintech. I mean, they talk the game, and you hear some of them talk about being we're the biggest fintech, blah blah blah. But and I'm not suggesting their game won't get better. They are responding, but it's hard. It's hard to replicate the DNA. So they're in the mix, and all of these challengers are not going to win, right? Some of them will fail. That's okay.
Very good. Well, let's keep trucking. We got more to go, and just a few more minutes, I guess 18 more minutes in which to do it. So APMs, as the kids might say, alternative payment methods or alternate payment methods. Where do they fit in this landscape? Where do they fit on the short to medium to longer term with respect to payments volume? What are some of the dynamics here?
Well, I think the dynamics are their network dynamics, and they are and their particular market dynamics. So there are markets today where they're already very relevant or even dominant. So if you looked at the China market, Alipay and WeChat Pay between them are maybe 95% of all mobile payments in e-commerce. So they're already completely dominant in that market. They've got critical mass. If you look at the Netherlands, Ideal, which is a bank-owned alternative payment system, it has about 60% market share. So you can find markets where they're very, very relevant. You can find a range of so-called emerging markets where alternative payment systems they've got good prospects, they're building scale. So Paytm in India is an example, huge number of customers and merchants. And so I think alternative payment systems, alternate payment networks that are in markets they already well established in, they're good, near, medium, and longer term. Markets where India is a market where it's kind of jump ball. There are traditional payment systems, RuPay, Visa, MasterCard. There are half a dozen of these so-called, digital wallet-anchored alternative payment systems, several of which are almost certainly going to be in the mix. And then there's Google Pay, Facebook. Facebook, we'll see what they do with Libra 2.0. I think at a global level, the alternative payment systems are going to grow. They have been taking share at a global level slowly from the traditional card systems.
Right.
And I think that's largely because they're overrepresented in big, higher growth emerging markets. I will suggest that in North America and in Europe and probably in Latin America, they're not likely to become particularly relevant in most markets. So other than PayPal in the US, alternate payment systems have very little relevance. The existing system works pretty well. Canada, same thing. UK. In a market like India, we'll see the card systems, the traditional quote-unquote card systems are trying to adapt. It strikes me as likely we'll see a mixed market. China is already a mixed market with the card monopolist, China UnionPay, Alipay, WeChat Pay. Some of these alternative payment systems at the national system level will go away. So give an example of one which I think goes away, and there are a number of these. In Brazil, there is a cash to pay online alternative payment system.
Boleto.
Boleto. And there are a number of these. There's one in Saudi Arabia. There are a few in the US. I think most markets, the long-term prospects for these alternative payment systems is bleak. Short-term, they provide value. But in 10 years, in the US market, is there going to be a need for an alternative payment system to pay online with cash at the physical point of sale? I'll venture no. In 10 years in the Middle East, will there be a need for significant cash payments at the physical point of sale for online payments? I'm going to venture no. So there's a class of alternative payment systems or networks which long-term, the value proposition probably doesn't work. Short-term, it's okay. And so it's a kind of a qualified, as a category, alternate payment systems will do okay. And of the global players, there are at least 3 that are semi-multinational: PayPal, Alipay, and WeChat Pay. I don't think any of those 3 will be genuinely global in 10 years. They may be bigger in their home markets. They may be bigger in some adjacent markets. But it is the path to achieving critical mass globally for them, I think, is difficult.
Fascinating. All right. Well, let's start netting this out. I know we're rounding the bend on the end of our time here. So let's kind of go through the winners and the losers in the short, medium, and long term. And I'll start the bidding here. I think one of the one of the interesting things, our friends over at Klarna, who indeed are friends, they managed to cause Visa's traffic to decline in Sweden over the last several years, which I'm not sure that that's ever happened before. And Visa has a tremendous share in Sweden versus other card networks. But I think what's interesting about that is just precisely to your last point there, right? Some of these things are relatively regional, and they're maybe driven by specific consumer behaviors or specific economic considerations that may or may not be durable. And I think that's exactly what you were just saying. But I'm just wondering, so over the short term, between, let's say, APMs and cards, is that the sort of thing that you'd actually say advantage APM?
I would say you have to look at it situationally. So Sweden is a great card market. I mean, 400 card payments plus per capita. What Klarna has done, though, installment billing, invoice billing, which is not revolutionary, by the way. It's been around for a century. But they got a slick value proposition together. They're very good at it. They had a brand with it, and they got good traction in that market, and they got a lot of momentum. And so they took share. But the biggest payment system in Sweden, far and away, is still, at the end of the day, traditional cards. And so I think we can find individual cases. Ideal took significant share because PIN debit didn't work online. The Dutch are debit card users, and the Ideal alternative payment system solved the problem. I can't help but throw out the you mentioned that Sweden is one of the few markets where Visa managed to lose share. There's some other cases.
Yeah.
There are a few other cases where it's happening for different reasons.
Okay.
In Turkey, Sweden is getting wiped out. Visa is getting wiped out of the domestic market by a domestic national champion, Troy. In Russia, Visa is being chipped away at by a national champion, Mir, run by the central bank. And so, no, the driver here in both cases is a bit of government pressure, but that works, right? It doesn't. If I lost the market share to a better mousetrap, I mean that's too bad. But if I lost it because of the government pressure, I still lost it.
Fintechs or banks in the short term?
I think so. Banks, they're losers in the short term. They're fine, right? They're necessary. The dynamics around payments aren't changing in a big way. I think fewer banks in the long term with thinner economics. So in that regard, small banks that are eliminated, they're big losers. And big banks that have thinner transaction economics, they're small losers, but they're still in the game. Fintechs, the ones with crisp, compelling business models. So, Adyen, it strikes me, will continue to be a winner. The model is working. And that's easy because we can see it. But if we looked at the issuer processes I mentioned, will CoreCard or Tribe or Marqeta or maybe even Adyen or Stripe have a compelling issuer processing business in 10 years? I will venture that at least several of them will and will be winners. Probably not all of them, but several of them.
I see some folks are starting to interact with some of this. If you've got a question, please use the Q&A. And if for whatever reason we don't get to it, then we for sure will send you a note and answer those post-webinar. Okay. Well, I think this has been really, really engaging. So thank you, Eric. I appreciate all of your commentary. We want to start for myself. I just wanted to throw out there that I think that the problem of identity, data security, and maybe just broadly data period, important sensitive data, is something that is very, very akin to the roles banks play both in the economy and in our lives as consumers and in our lives in business, as kind of the custodian, sort of a guarantor in some respects, and also people who are responsible for taking care of all the security issues that come up. So I'm kind of a mind that over the very long period, banks actually always have a place. Not only do they always have a place because of currency and their role in regulated fiat currencies, but I think they've also got a growing role in terms of just somebody's got to keep us safe from everyone else out there, and that's just sort of the thing that we ask banks to do, is keep things safe. they have safes. Maybe that's partially why. Okay, so just real quick, as we're wrapping up here, post 2025, the far and distant future. Tell us a few things that you think, particularly things that maybe we haven't yet imagined. Right? You're put yourself in Mr. Gates' shoes, and see if you can help us imagine something we may be underestimating its ability to change or disrupt or just be totally different for us out there in the foggy distant future.
Digital currencies. So, cash today, there's monopoly fiat money, cash, issued by every government on the planet, most governments on the planet. We have physical cash people use, people stock away. There are, the known electronic payment systems, but 80 or 90%, I'm sorry, 60% of like 80 central banks surveyed by the Bank of International Settlements are actively working on or considering wholesale and or general purpose digital currencies. And I know we're not supposed to talk about COVID, but I think COVID makes it more likely, not less, that that central banks will get into digital currencies. We have several banks that have their own digital currencies today. Chase and Signet Bank both have digital currencies in the U.S. Their use case is principally B2B, but there will be bank issued, I think, digital currencies for retail. Visa has a patent, or it's applied for a patent for digital fiat currency. Zuckerberg and Facebook have come back with Libra 2.0, really scaled back so that it's palatable to the regulators. It's going to be tied to individual national, the currencies of national jurisdictions, which takes away, I would argue, the biggest objection that most regulators and politicians really had. So I think, 2025 out.
We'll have figured out this whole digital currency thing.
They'll be in the mix. They'll be in the mix, and I think that's a good thing. It's, which doesn't mean, by the way, that physical cash is going away. It's anonymous. Right. You don't need to have a mobile device or electronic device. You don't need connectivity. And so the use will be less for sure, but it still be around. But in the mix will be a range and I would suggest fiat digital currencies. Sure. And they may be central bank account-based currencies. I hope they're not, because that would be very bad for banks. That would be catastrophic. So there's a proposal out there that the Fed introduce Fed accounts. So there would be central bank currency that consumers and businesses could use, real-time instant settlement. But that really disintermediates, competes with the traditional bank ledger-based money and credit system, and would be, I think, catastrophic to have state banking. But some countries will probably do that. The Swedish central bank is piloting right now a central bank digital currency, but it is using banks as the agents to distribute. So it's not disruptive of the banking system. But picking one thing that could be in that time frame, not expected and a big deal, that's my pick.
Awesome. Well, Eric, it's always a pleasure. Thank you very much for spending a little time with us. Eric is principal at Intrepid Ventures. You can catch him at intrepidventures.net. Of course, I'm Bruce Parker with Modo Payments, and you can check out what we're up to at modopayments.com. Thank you so much for joining us today for another Payments Geek Roundtable. Everybody stay safe out there and relaxed and groovy, and we'll look forward to seeing you at some point, hopefully in the not so distant future. Thanks very much, and take care. Thanks for joining us.